This is called a tax-free car allowance, or sometimes known as an accountable program, and it's associated with IRS Publication 463. So this is an alternative method of reimbursement, which allows companies to offer simple, flat allowances to drivers without the compliance regulations associated with more flexible, robust alternatives like favor. So this is eligible to be up to 100% tax-free relative to a driver's reported mileage. So let's take a step back and talk a little bit about what that means. So in this scenario, I could pay my drivers anything I want. I could give them $10,000 flat for the year. I could pay them $500 per month in a flat car allowance, which is very common. I could even use favor market rates. I could use favor reimbursement. But the difference is how they're taxed. The difference is that we assume they're out of favor compliance in how we tax them. That means we're always comparing them against the IRS standard equivalent at all times. Meaning, I calculate their mileage, I multiply it times the IRS standard rate of 67 cents in 2024. It'll probably change next year and we'll do a different calculation. And then I compare it to what they actually got, what they actually took home on their tax-free car allowance. And only the difference is taxed. Only the difference is taxable, just like an out of a compliance favor program. So this is a lot more simple, right? It's a great option for companies that are struggling with favor compliance, right? So if you have a group of drivers who are perhaps high mileage, but their cars are way too old and the company doesn't mind that, the company doesn't want to put any thresholds in place that require newer vehicles, it's common. Some companies do require that. But if that's the case, this is a good option, right? The other option is when you're looking to lock a rate across a department or group, or, and this is, I think, the best scenario really for when this should be used, is for executives looking to just erode their tax bill, right? A lot of the times executives don't hit the road too much, but they do have a pretty healthy driving benefit. Or it could be, flat stipend, it could be within payroll. But for people who are really just looking to erode that tax bill, enrolling them in a tax-free car allowance allows them to do that really, really simply. Whereas your other road warriors, your field sales, your field merchandisers, your field service technicians being on favor makes a lot of sense because they could potentially, of course, have 100% tax-free reimbursement and are being paid very fairly based on their mileage, not over or under inflated.